Just about end of financial year in Australia, so what can we be doing as Australian expats to minimise our Australian tax? Let's dive in. Hi there, Jarrad Brown here, Australian expat financial planner. In this video, we're looking at end of financial year strategies for Australian expats to minimise their Australian tax. Now, Australian tax would apply if you have rental income, if you're an Australian tax resident and therefore still paying tax on your worldwide income, or if you have other Australian sourced income. Now, that might be through a family trust, it might be through something else, but these are the situations in which Aussie tax would apply. So we have a few options to get rid of these tax liabilities. Number one, you can consider prepaying interest on your investment property loans. To do so, you call your bank, call your broker, agree on a rate, and you can prepay up to the next 12 months worth of interest to bring forward that tax deduction into this financial year. So that's option one. Option two is you can start to look at any repairs or maintenance issues with your investment properties and bring those forward into this financial year. That might be fixing the aircon, it might be repainting, anything to bring it back to the original condition rather than an enhancement or improvement is usually going to be treated as a cash deduction. So have a look at your options there. You could find that there are some good options to consider. The third one with your investment property is if you haven't already got one, get a depreciation report or a quantity surveyor's report as it's otherwise known. In Australia, you can claim the building costs of your property over a period of 40 years. You can also claim the cost of the fixtures and fittings as well. So this can be a great way to reduce your tax liability, to avoid utilising losses if you don't need to, and to effectively generate some additional losses while you are living and working abroad. So there are just three things to consider when it comes to your investment properties in Australia. Now, the other big option we have to consider is superannuation. So as an Australian expat, yes, you can still make super contributions. The question is not can you, the question is should you. So the first contribution consideration you've got is to make concessional contributions. Now this one you can roll in up to $27,500 into your super fund, and that can be used to offset other taxable income in Australia. You can also utilise the carry forward rule. So if your super balance was below 500,000 the end of last financial year, you could utilise up to 5 years worth of concessional contributions. Now, this can be a very handy tool as well if you are looking to move back to Australia. It allows you to potentially get a reasonable amount of money into super, claim the tax deduction, boost your retirement savings, and get your money into a tax-efficient vehicle. The other option you have around super is the non-concessional contributions. Now this is a limit of $110,000 per year, or you can also use the bring forward rule, which allows you to contribute 3 years at once. So $330,000, which means for a couple you could contribute $660,000 into your super fund. Now there are tax considerations when it comes to super. There is tax payable within super, so you shouldn't go and roll all of your money into super tomorrow. Do be mindful of what your options look like because there is also no capital gains tax or dividend tax here in Singapore. So there are always options to consider, but they're just a few of the options when it comes to tax deductions and end of financial year planning. Now, a couple of other housekeeping items. Be mindful that if you have HECS or HELP debt in Australia, you do need to be declaring your worldwide income and making those minimum repayments. And number two, if you have a family trust in Australia, make sure that the nominations of beneficiaries are filed, the minutes are filed, and your trust is compliant. So reach out to your accountant early, plan ahead, and make sure that your tax obligations are fully met. Any questions at all, drop me a note. I'd love to hear from you, but thank you for tuning in.